please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, 29 minutes and 11 seconds left for the monetary policy. We are counting down. Of course, the market today has been very strong. Let's see if the policy would support that move or would puncture that rally. We'll find out. With me, of course, is Sonia. Hi, Sonia. Good afternoon.
Hi, good afternoon, Anuj. So far in the market, there's been no volatility. The good part is we've managed to sustain our gains at the start of trade. But do you think that, we're still not out of the woods?
That's tough to say. You take an hour at,
these
at
days,
a time, these days, not even a day. But today's been a good day, and my sense is unless you have a completely, hawkish policy, chances are that it should not puncture the rally and the market should close at the highs of the day. It's a trend day that you have seen. And I think the bears tried to sort of take the market down from the resistance point. 10,270 to 80 is a bit of a resistance, but especially on the bank nifty, if you start to cross yesterday's high was 24,666. There's still about 160 point gap. If you do that, that's a big if. In the last hour, there's going to be more powerful short covering. But as you said, Sonia, you have to take really each day as it comes, or you just say that I am an investor now. I don't care about markets trading moves, which is actually how it should be, and you focus on your good quality stocks, and every time the market gives you an opportunity, you buy them. That's all I think I would say.
I think that's how the market is approaching it, because even if you see it broader markets, I mean, look at the quality of stocks hitting new highs, right? There's D-Mart, there's Apollo Tyres, there's Interglobe Aviation. So clearly there's a focus to buy good quality names in this market.
Oh yes, I think the fact that this year is going to separate the men from the boys, Sonia. Obviously, last year was so good, 48% mid-cap index rally. That is not going to happen this year. But individual stocks will still do their jig. So, I would be keenly watching out for the fund's performance this year compared to last year. This year, I think, is the real test.
Okay, so quickly before we go to the guests, just to get it out of the way, Anuj, the policy is expected to be not move on rates, but you get a sense that even if it is a hawkish policy, this market is anyway in a medium-term downtrend, so it may not really impact it too much.
My sense is that as of now, the market has priced in, the worst that could happen. So only a positive surprise is left, but then you never know. You don't want to second guess the RBI. Fed is an easy call. RBI sometimes is not an easy call, so I would not take that. Let's see. I think the market will give you a reaction. It would be short-lived reaction though. On the monetary policy, the market will move regardless.
Okay. Well, there are of course concerns with respect to inflation, MSP prices, higher crude prices, etc. since the last policy. So let's see what the RBI does. But how should you position yourself in this 90-odd minutes of trade? Ashwani Gujral and Prakash Gaba join us now with some closing strategies. Gentlemen, welcome back to the show. Ashwani, we still have about 90 minutes before the day comes to an end. You get a sense that the stability we've seen through the course of the day will hold, or should we brace ourselves for another volatile ride?
So if you bought in the morning, you are probably making money by now. I have had experience. You expect this and that, and RBI misbehaves and the bank nifty collapses 250 points. So I am not betting on any expectations. Once the policy is out, maybe positions can be taken afresh, on the upside. But, generally these event type days, a couple of words in a statement, something, I mean, you don't want to mess with that if you've made money through the day. But definitely it looks like if there is cause to cover shorts, you should have a 60-40 bias. If you have to take a position, buy some calls on the bank nifty, that is a better way of dealing with volatility. But overall, today seems to be a mirror image of yesterday, and that is the way a lot of days are going to end up. Having said that, try to keep away from banks for the last hour. So we bought TCS, that's a buy with a stop of 2900, target of 3050. Vedanta is a buy with a stop of 284, target of 298. Tata Motors DVR is a buy with a stop of 203, target of 217.
Fair enough. No banks on the list, Ashwani. Is it you given the call through the day? Of course, your last hour call was also on banks, all three big ones. But for last hour, you're saying that just because of this policy, just stay away from banks for last hour, at least on futures.
And because banks have come back a lot, now it's not worth playing for the last 50 points.
Okay.
Because, things can go wrong. Let's be clear.
Fair point, fair point. Let's invite Prakash Gaba as well. Prakash, good afternoon. So, what's your thought process and what stocks are you buying or selling?
Good afternoon, Anuj. So far, I see that we must have a stop loss which is very tight. I think the one is 10,250, or maybe we can higher it up. What we really need is a tight range developing. We call it a pennant here. Now, we are expecting some kind of an up move or a down move, but a massive move is expected. So contraction has happened, the expansion would happen here. It's a matter of time. Which side, we don't know. So I would say tighten the stops here. I have two stocks here. One will go CEAT, can climb to around 1675, 1700 zones, and would have a stop below 1600. And I will look at Jindal Steel as well. The stock can climb to around 250 zones, stop below 230.
All right, fair enough. So that's a lot of buy calls as we step into the last 90 minutes. SP Tulsian of sptulsian.com and Prakash Diwan with us. Good afternoon. Mr. Tulsian, first thoughts on Adani Enterprises. Do you think this is fairly in line with what you thought would happen with the stock, considering it had a last hour big decline? So that adjustment of business, is this the fair value?
I think that it has reacted exactly on the lines which we have been advising to our clients, and yesterday after having corrected that was in fact giving a good entry point. But never mind, because we have not been taking very positive view on the green energy business, where the about 760 shares for every 1,000 shares, or maybe 76% of the shares will get issued. But rightly, market has taken it in its right perspective, and in fact we have given the morning in the buy call also maybe at around 135, 137, but now it has moved to 146. So maybe seen to be probably a bit expensive by about 4-5 rupees, but difficult, but not very much convinced with the green energy. So yes, keeping a positive view on Adani Enterprise from here on. Yeah.
Okay, Mr. Tulsian, welcome to the show. We have Prakash Diwan who also joins into our conversation. And by the way, today has been a great day for non-index large caps, as we told you. Interglobe Aviation, Apollo Tyres, MRF, SRF, Nestle, all hitting new highs. Prakash, hi, afternoon. We've spoken about SRF in the past. It used to be the darling of investors. Now, once again, it's moved back to a new high. At this 2,000 rupee price, you think it's good to go?
I think, yeah. So what's happened is, SRF was waiting for a re-rating of sorts after this minor correction that we saw in the month of Feb. And, yesterday's move by China in terms of outlining about 106 items also includes a lot of chemicals. They have not, of course, specified the date by which all the tariffs are going to be imposed. But as and when that happens, or if and when that happens, SRF also stands a very good chance, in terms of bypassing that particular route, and where China could probably have an issue with the US, but SRF probably gets away with that. And that segment of chemical production that they have, they've scaled up in the Dahej facility at a very decent incremental cost. So, the operating leverage would start kind of, actually getting compounded. So my sense is people have started sensing that change in the earning profile for the company, and that's where, you'll probably see this momentum continue for some more time.
A lot of people have said this could be an uneventful policy, but a very eventful speech and very eventful post-policy conference. A lot of questions could be asked to the governor with respect to the banking scams, etc. Let's see what comes out. For now, the market is holding up just fine. And for all you Salman Khan fans, he's been sentenced to 5 years in the black buck poaching case, not 2 years. So I guess, well, disappointing for the fans.
Yeah,
and
disappointing for the fans, but I guess you pay back for what you do. So
absolutely. Well, our guests are still with us, so let's go to them and see what we should be buying or selling now. Mr. Tulsian, we discussed the tyre space in great detail, but specifically on Apollo Tyres, I wanted your thoughts because, if you compare valuations, Apollo Tyres is much cheaper to its peers like MRF, etc. It's trading at around 12 times FY20. Do you think that there's a bit more catch-up that Apollo Tyres could do?
See, in fact, in last 3 days, probably 2 times when I was asked on the tire stocks, I have said that Apollo Tyres looks the best amongst the lot. I'm not saying that the others are not good, but maybe in terms of the appreciation from the investor's point of view. And coming on your point, if you really see their overseas business, there they have shown a classic turnaround. And in fact, it is the growth or maybe the improvement in their margins and the financial performance. On the absolute number, if you see without taking the growth and the turnaround, probably you may get disappointed. But I think that otherwise amongst the entire tire space, probably this is the best stock, and still we hold a positive view. I'm not saying that other stocks are not good. And in fact, this is what I've said twice in last 3 days, that MRF is just out of reach. This is just a vanity stocks. If you want to, you will buy a couple of shares, or maybe maximum 5 shares. And that is just to have it in your portfolio. But I don't think that that's the right way of investing. So if you want to take a call on any sector, you need to see either the turnaround or the relative growth amongst the comparable peers. So taking that into account, I think Apollo Tyres still holds the investment potential.
All right, Mr. Tulsian, we will thank you on that note today. We have to, of course, now focus on policy coverage. We'll talk to you tomorrow. Thanks a lot for joining us today. By the way, minor bit of dichotomy right now. The Nifty is trying to move to the high point. The Bank Nifty just, I won't even call it a slip, but bit of, move about 30 points thereabout. Ahead of policy, of course. So stocks like Axis, for example, IndusInd, there's Yes Bank, minor bit of nick, still in the green, of course, most of them, all of them. And stocks on the upside, IT stocks are gaining. So Tech Mahindra is there, and of course a couple of others like ITC as well. Prakash, before we thought now, of course, to invite you back after policy, I wanted your thoughts on, the kind of move Tata Motors has seen. Has it put a bit of a near-term bottom in place after the JLR number? And it was a material number that the market is focusing on. 20% of the numbers come from US.
Oh, absolutely. No, and you need to see this in conjunction with the fact that another quarter, or maybe at best 2, and if the pound to the dollar moves back to that 1.47, 1.48 levels, which it was when they actually got this large hedge position which they were running losses on. It's not too far off right now at 1.4, 1.41. I think all that negativity on the balance sheet is going to come off. So that's where all the pluses are going to converge. You have the CV vehicle cycles very favorable, working favorably for them within India, JLR across the geographies. And of course, this drag which was there. So my sense is Tata Motors at 330 was the bottom that you saw in recent times, and it makes sense to buy the DVR because the gap between the DVR and the main underlying will also kind of start reducing. So absolutely, I agree. Of course, I have been bullish about it even at 400 plus, and was disappointed with some of the earnings, but a very good time to keep on adding to the portfolio.
Okay, and also China imposing those tariffs on US cars,
is going to
it will be
indirectly
a positive
help
for UK-based manufacturers like Jaguar Land Rover, right?
High point. Taimur Beg of DBS Group Research, Anant Narayan of SPJ IMR, and Dinesh Kumar Khara of SBI now join us. And over the next 30 minutes, we'll get more guests joining us. Good afternoon, gentlemen. Anant, let me start with you. Over the last few days, we've seen so much volatility in the money market. Your thought process right now as we head into the policy.
Afternoon, Anuj. Look, as far as the rate is concerned, I think there is consensus that nothing is going to happen. It's going to be a non-event policy. And I tend to go with that consensus. As far as what is expected is, what is the language that the policy actually comes out with. Given that inflation prints have actually been a lot more benign since the last Feb 6th policy, there is an expectation that the RBI will continue with the neutral stance and the kind of soft kind of touch which the Feb 6th policy brought about. I'm personally hoping, though, that they don't let loose they don't let go of their cautious stance. I think on the financial stability front, both on the fiscal side and on the external side, there are enough concerns that should cause us to think, and therefore they should be very, very vigilant. Otherwise, I think this policy will be looked for other things, including what happens on the Feb 12th circular, not in the MPC per se, but outside of the MPC. Does the RBI provide any forbearance to banks on the Feb 12th circular on recognition of NPAs? Do they come out with anything on the FPI limits? And there's just been a news item right now on dividend payment, interim dividend payment, whether that gets confirmed or not. I think those will be a lot more important than the policy itself.
Actually, that's true. That's what you were just discussing, Anand, that, it will be an uneventful policy. It could be an uneventful policy, but it's definitely going to be an eventful press conference. Taimur Beg of DBS Group Research is also here with us. Taimur, your own comments, because there is now widespread expectation that the RBI could moderate the NPA resolution rules after they sort of, moderated their stance on that MTM losses of banks. You think that's something that could come through? And what else are you looking forward to?
Yeah, I don't think it's going to come in through today, but I think there could be some degree of signaling from the authorities that they are taking the balance sheet implication of the restructuring on banks seriously, and that there will be measures they'll take to make sure that banking sector restructuring progresses in an orderly manner. But I don't think it's coming today. But generally speaking, I think I agree with the view in this panel that the monetary policy part, there's been a sort of series of fortuitous developments, at least on the domestic side, which makes the RBI, I think, breathe a little easier with the inflation outlook. And growth is not necessarily looking too hot or too cold. And that is also another area where they can sort of express their neutral view. But there are a lot of risks in the horizon. Some of it is inflationary, some of it is deflationary. And the RBI will have to make a call as to, net where they stand.
Okay. Sajid Chinoy is also with us. Sajid, good afternoon. So obviously, I won't ask you whether you're expecting a rate move because it's consensus. So in terms of policy language, do you expect RBI to be more hawkish, less hawkish, neutral? What's your call?
I think the language could go either way. Our baseline case is that they will be a little bit more cautious. What you have to trade off is near-term good news on inflation. We've seen food prices fall much more than anticipated. So in the near term, inflation is undershooting the RBI's projection. But equally, I would argue in the last 2 or 3 months, medium-term risks have gone up. There is more conviction now that the government's serious about pushing up food prices. The RBI was more agnostic in February about whether oil prices would sustain at these levels, and they have. So, we might see some upgrade in their oil price forecast for the next year. And I think there's more conviction now that, the worst on the growth front is behind us, that there is a growth recovery on the anvil. So the combination, I think what makes this policy interesting is you've got this combination of higher risks in the medium term, but better news on inflation in the near term. For me, what really matters is the inflation outlook. Whatever the language may be, I think the proof of the pudding is where does RBI see inflation a year from now? I think over the next 3 quarters, inflation could be quite misleading. You get a bump up in the second quarter because of unfavorable base effects. Third and fourth quarter, inflation will go down statistically because these HRA and GST impacts unwind. First quarter 19 is, I think, where you get the clean inflation number. Now, 1 year from now, where does RBI see inflation? Is it closer to 4.5%, in which case they're more sanguine? Is it closer to 5%, in which case they may be sending a signal to the market? So I think that for me would be the important takeaway from today's policy.
Okay, fair enough. Yes, in fact, even the February policy, just to, jog our memory, was a bit hawkish in terms of its tone because of inflation quickening at that point in time. But let's get Mr. Khara on board as well. Dinesh Kumar Khara of SBI is also with us on the panel. Mr. Khara, good afternoon. What exactly are you expecting from the RBI with respect to moderation of NPA resolution rules?
Well, I think as far as the NPA resolution rules are concerned, I would say that recently they have come out with a circular where they have sort of given some kind of a relief for the cases which are referred to NCLT. So I think I don't expect anything beyond that in the today's policy as far as the NPA resolution piece is concerned. But of course, we are hoping a lot many things to happen on the NCLT front, and maybe that will, if the resolution happens, it will ease the pain on the system to a greater extent. This is what my expectation is.
Okay, so on the NCLT front, you are expecting perhaps something to be announced. But I wanted to get Taimur in on the point that Sajid was making. Taimur, there is a risk to higher inflation, higher crude prices, MSP, etc. is putting a bit of burden there. Do you think there could be any tweaks either to the inflation or to the growth forecast today?
The growth forecast, I think there's a chance of some sort of positive bias, if you will, even if there's no specific numerical change in the forecast. When we look at the last 3-4 months worth of data, clearly, whether it is on production side or on the retail sales side, things have looked up after a long time. I would say since mid-2016, we haven't really seen a decent set of numbers that we're seeing in the Jan-March quarter. Now, the unfortunate thing is that, while the rest of the world has joined into a very strong trade dynamic, India has been sort of left behind on that area, and therefore the external side hasn't contributed substantially to growth, and it won't even in the January-March quarter. So net, definitely a pickup in momentum from the mid-6s to high 6s, perhaps even in 7% in Jan-March. But how it sustains for the rest of the year, I think, would depend on RBI's view on the total strength of domestic demand. I think the MSP increase would certainly be a positive for income at the rural level, and going into the second half of the fiscal year, we probably will see that filtering into stronger demand. So from that perspective, there is definitely some room for optimism. I think that higher oil prices were something that, were spoiling the external account picture, and questions about how much net exports would contribute to or take away from growth. We can probably rest easy on that, at least on oil. There are other commodities where there are questions, especially related to the tariff battle that's going on between China and the US. But generally speaking, on oil, I think we can be relatively neutral, expecting $65 or so for the rest of the year, which I'm sure would be a source of relief for the RBI.
Okay, let's just do a status check of where we are right now. We are almost at the high point once again. The Sensex, the Nifty, the mid-cap index, the Bank Nifty, all of them at the high point. Let's get the money markets as well. The bond yield, I think, is at 7.27. So it's softened a bit today. That, of course, has been quite volatile over the last couple of days. But 7.281 is what we have right now. For Anant, so what's the direction for the bond yield from here? Right now it's 7.28.
So look, besides the policy, I think the bond yields have been heading down. Clearly, we had a fantastic H1 issuance calendar, which is very, very bond supportive. Lots of floaters, lower duration and lower size of issuances. Plus the respite which the RBI gave belatedly on mark-to-market, spreading the losses over several quarters, should get Indian banks back into the system. There's also talk that FPI limits might be increased, and that might be an additional source of demand for bonds. So you could see the trend continuing, of course, depending on what the monetary policy report comes out with, or the statement comes out with. If we see a neutral to dovish statement from the policy, I think that will accelerate the rally in bonds, and we could head to below 7.2% on the 10-year, maybe down to even 7.1% as an overshoot. I think, frankly, those would be good levels to sell bonds and get out of the positions, because while short-term inflation, as Sajid mentioned, is looking good, the overall situation is still looking pretty murky on the fiscal front and on the external front, and therefore it might be a good time to exit. If they do come with a neutral to hawkish stance, you might see bonds just settling where they are and waiting for fresh cues.
Okay, so Sajid, come in on that, because there is a market expectation that the limit on foreign investment in bonds could be raised. Is that something that you're expecting as well, and anything else on that front?
We do think that there could be a case for that, but I think the increase in our base case will be quite modest. I think the RBI is in no rush to raise that. I think what will be interesting is to see whether any potential increase and how that's divided between the general limit and the special limit. I think the larger issue on the bond market, and we've said this before, that I think there is a bit of a fiscal trilemma that Indian policymakers face, where over the last 4 or 5 years, total consolidated supply really hasn't come down. The total deficit, center and states as a percent of GDP, has been flat. On the other hand, we've seen a reluctance in many cases justified.
Sajid, I'll have to intervene you here because we have the policy now.